And once you do your own research, by and large, you end up wanting to own more Bitcoin. And so your 1% allocation will become a 3%, will become a 5%, will become a completely unreasonable percent like my portfolio. So, that's what you do. And so I would say just get off zero. The ETFs are a very easy thing to do. Hopefully you graduate to getting comfortable with buying it on an exchange, taking it off the exchange and having your own keys that you can manage, because that's the ultimate way to own Bitcoin, where you have access to it anywhere in the world. You don't have to take it with you. You just need an internet connection, and it's there waiting for you on this blockchain, that time chain that's been long established, secure, it's immutable, it's not going anywhere. You have your keys, it's your Bitcoin. And so that's the ultimate way to own it.
James Lavish offers a distinctive viewpoint on the changing financial scene, especially in relation to institutional acceptance of Bitcoin. He emphasizes how intelligent investors are being forced to reevaluate their asset allocations due to the current economic climate, which is characterized by growing debt and inflationary pressures. Lavish highlights that Bitcoin is now a need for capital growth and preservation rather than a speculative investment. Institutional investors can no longer overlook the evidence that Bitcoin improves returns while controlling risk when it is judiciously incorporated into a diverse portfolio. The acceptance of Bitcoin is gaining momentum more than ever before as large players progressively increase their exposure. We're about to dive into his latest insights, but first, make sure to subscribe and hit the bell icon to stay updated with our latest videos. Thank you, and enjoy the video.
We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin. They're wanting to hold MicroStrategy. They're looking for ways to augment their returns. And they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly. And which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's a very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornevest's old firm. He's no longer there. It's now being run by the managing partners, Jamil Akhtar. He's a colleague of mine from the Dallas Fort Worth days. But they're a massive holder of this. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio and likely augment their returns. I haven't talked to Jamil in a while, but that's my guess. And so that's like one institution nobody would have even heard of, but it's a massive hedge fund. They're quietly, have been accumulating. And now you're hearing about banks accumulating Bitcoin. You've got we saw I think there was another announcement this morning of bank buying. Was it the Swiss bank? You've got, and I've got to bring it up. I can't remember who were the big banks. Yeah, it was UBS. So you've been seeing big banks like UBS was announced. You've got Cantor Fitzgerald. You got Bank of Montreal. These are massive banks that are all buying MicroStrategy. I do think that this is going to continue. If you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now. And I think that that's still very much in play. And Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position because you could easily miss out. This could easily just outrun everything very quickly. And if you look back over the years, I think it's like 10 days out of every year that Bitcoin makes its gains. And so you just can't, you have to be allocated to, you can't miss those 10 days. That's how volatile this thing is and how explosive it is to the upside.
The potential for the U.S. government to purchase Bitcoin with the Exchange Stabilization Fund is an intriguing concept that James Lavish examines. Even while he thinks this is unlikely, he admits that it would be revolutionary if it did occur. Theoretically, the ESF, which has roughly $200 billion in assets, might invest part of that money in Bitcoin, which would cause an instant supply shock and raise prices. Though doubtful, Lavish points out that such a move may potentially convey a concerning message regarding the stability of the US dollar. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
It's possible that he could, use the Exchange Stabilization Fund in order to buy Bitcoin. Now there's some differences here though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. You could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin. $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly. Maybe half a million Bitcoin, but likely not. If he announced that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so, you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like I'm not, if the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. And so, that's one path. I think it's pretty low likelihood because, you'd have to, there's some reasons for that. If he did that, he would be signaling to the world that he's worried about the US dollar, exchange stabilization. Like we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I think he's probably reluctant to do that, even if it is something he could do. Cause he doesn't want to Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs. I'm sure I know his family owns some Bitcoin. He wouldn't mind that. I'm sure he wants his Trump coin to be at all-time highs. He's got a huge ego and he wants he talks about the market all the time. If initiated the exchange stabilization fund to buy Bitcoin through an executive order, I mean, that might tip off a sell-off in the markets, in the general markets, because, oh my God, I don't want to own US dollars. Even the government knows there's a problem because of all this debt. Because all these years we've been talking about debt. We've been talking about debt for decades and how it's a problem. It's never been a problem. So when you hear traditional market analysts talk about it, they're like, we'll deal with it like we always have, no big problem. It's just debt. Debt, it creates productivity, and which part of that is right? Okay. It is true that debt creates productivity. It brings future productivity into the now, but irresponsible use of debt doesn't. And so that would tip people off to that problem. And then that means he and his cabinet would probably be reluctant to do that. I mean, what would be the point? Just to get Bitcoin to go up? I don't see that. It depends on the individual. I can't give everybody the same advice. I'd say the wrong number is 0. Get off 0. But what ends up happening, Alan, is, you've been doing this for a while. People start buying Bitcoin. They start reading about it. They start researching it themselves. Again, to bring this full circle to the beginning of the conversation, they start doing their own research. And once you do your own research, by and large, you end up wanting to own more Bitcoin. And so your 1% allocation will become a 3%, will become a 5%, will become a completely unreasonable percent like my portfolio. So, that's what you do. And so I would say just get off 0. The ETFs are a very easy thing to do. Hopefully you graduate to getting comfortable with buying it on an exchange, taking it off the exchange, and having your own keys that you can manage, because that's the ultimate way to own Bitcoin, where you have access to it anywhere in the world. You don't have to take it with you. You just need an internet connection, and it's there waiting for you on this blockchain, that time chain that's been long established, secure, it's immutable, it's not going anywhere. You have your keys, it's your Bitcoin. And so that's the ultimate way to own it. And hopefully people graduate to that level. But if they're not comfortable with that, I do encourage them to go ahead and buy some ETF, do your research, and start understanding why you'd want to own the real thing.
In his closing remarks, James Lavish stresses the significance of acting on Bitcoin. Although each person's financial circumstances and risk tolerance are unique, he admits that the main lesson is that holding 0 Bitcoin is the incorrect strategy. Since people who start learning about and comprehending Bitcoin have a tendency to grow their holdings over time, he advises people to start with even a little commitment. As they learn more about Bitcoin's fundamentals, many investors who first just allocate 1% of their portfolio to the cryptocurrency eventually raise it to 3 to 5%. Or even more as they come to appreciate its long-term worth. According to Lavish, ETFs offer a straightforward and approachable method of gaining exposure without the hassles of self-custody for people who are not familiar with Bitcoin. Institutions and individual investors alike can benefit from Bitcoin's growth through these investment vehicles without worrying about managing wallets or protecting private keys. ETFs are a handy place to start, but he doesn't think they should be the ultimate objective. Direct ownership, keeping Bitcoin in one's own possession, removing it from exchanges and protecting it with private keys is what gives it its true strength. Since Bitcoin is accessible from anywhere in the globe and is not governed by banks or governments, this guarantees true financial autonomy. Lavish also emphasizes the special characteristics of Bitcoin as an unchangeable, decentralized asset. Bitcoin functions on a fixed supply, which makes it an appealing hedge against monetary devaluation, in contrast to traditional currencies that are subject to inflation or manipulation by central banks. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.